Welcome to another S&P 500 analysis. This is the midweek edition. Today is March 10, 2021. The S&P 500 failed to do what many market participants believe it should have done by now, and that is a sell-off back toward the pandemic low. And the carnage in the Nasdaq market is reinforcing this belief for a lot of the market participants. So the question is the game over? In this video, we'll look at the price action of the S&P 500 and the other major market indexes along with the market sentiment and its internal to see, is the market telling us the game is over? Stay tuned. Before we begin, I'd like to tell you something new that I have done on this video. I have placed the timestamp for each segment in this video in the description below so you can use it to skip to various segments. But I hope you do not use these timestamps without having first watched the entire video. Otherwise, you could be missing the message from the market and you won't get the full picture on what the market is telling you. Let's start with this intraday chart of the internal and the sentiment. We see the S&P 500 price action is relatively flat for today. It did finish the session with a gain of 23 points or 0.6%. We also notice the new 52-week high and the 52-week low. The new 52-week high outnumbered the new 52-week low by 379, and this number climbed steadily throughout the session. The up-down volume ratio also started the session at almost 5-to-1 in favor of the up volume and fluctuated throughout the session between 2-to-1 and 3-to-1 in favor of the up volume. We also noticed the VIX was hovering near the 23 level most of the session, and the put-call ratio was in the 0.55 area. And the daily advanced decline with the advancing issue outnumbered the declining issue in a range of 1,500 and 1,700 throughout the session, and ended the session at 1,640 more advancing issue than declining issue. So the takeaway from this chart is the S&P 500 finished the day with positive sentiments and strong internals. It had good upside support from the up-down volume ratio and the daily advanced decline. Also 379 more new 52-week high than new 52-week low. Now let's look at the daily chart of the market sentiment and the internals. From this sentiment chart, we see the VIX, or the fear index, came back down this week to the low end of the caution zone between 20 and 30. Also, the put-call ratio is back away from the 0.75 level and sitting at a risk-on level near 0.55. Moving to the internals, the up-down volume ratio have been positive for the week so far. Even on Monday, where the S&P 500 lost ground, the up-down volume ratio was positive 1.3. The daily advanced decline had the advancer leading the decliner every day of the week so far, and the new 52-week high outnumbered the new 52-week low, with Monday having the highest number for the week at 446 more new highs than new low. And the New York Stock Exchange cumulative advanced decline line is at a new high, while the S&P 500 is a bit below its all-time closing high. This shows strong internal strength from the advanced decline. Now let's look at the Nasdaq market internals. The strongest day for the week so far is yesterday. Yesterday, the up-down volume ratio was positive 7.29, with 1,940 more advancing issue than declining issue. But today, the Nasdaq 100 finished the session with a loss of 42 points or 0.33%. It did have a positive up-down volume ratio of 1.02, with 1,150 more advancing issue than declining issue. The reason for the loss came mostly from the large-cap tech stocks such as the FANG stocks and some of the high-flyer, high-priced tech stocks. Looking at the new high, new low, it is still positive. The Nasdaq had 392 more new 52-week high than new 52-week low. And every day of this week, the new high outnumbered the new low. From the Nasdaq cumulative AD line, we see there is a positive divergence between the Nasdaq 100 and the cumulative AD line. Although the Nasdaq cumulative AD line did not make a new high, such as the New York Stock Exchange cumulative AD line made a new high. Now let's go look at the price action of the S&P 500 and the other indexes. Starting with the daily chart of the S&P 500, we see that it bounced off nicely from this trend line here. In addition, it appeared it had broken this pullback descending trend line. So we'll continue to monitor the S&P 500 to see would it be able to come up and test this all-time high and possibly put in a new all-time high on the upside. Then on the downside, we're basically looking for support, potential support from this trend line. And if break that support, then we basically look for a retest down here at this 3784 area. Here's the daily chart of the Nasdaq 100. It is quite different from the S&P 500. It lost essentially somewhere around 11% from this high to the recent low here. And at today's close, it lost approximately 8%. And from the upside, we'll continue to monitor to see would it be able to get back up to this level near the 13,280. And for the downside, we'll continue to monitor for a downward move to see would it come back down and retest this level here near the 12,204. And the Russell 2000 continued to trend upward after it bounced off this upper channel trend line. We're basically monitoring to see would it be able to come back up to retest the all-time high. And for the downside, we're essentially watching this trend line here for potential support near the 2200 area. Here on the Dow Jones Transportation, it closed today with a new all-time closing high. And on Monday, we saw it made a new all-time intraday high. So we'll continue to monitor the Dow Jones Transportation for a higher high that could be above the 14,000 level. For support, we'll monitor the lower channel trend line here for potential support. Finally, the Dow Jones Industrial, it also closed with a new all-time closing high after making an all-time intraday high today. Remember, we were told by the Dow theory to be on the lookout for this closing high for the Dow Jones Industrial. And today's closing high is another confirmed high. What this means is there is a high probability for the Dow Jones Industrial to make another all-time closing high before the market makes a top. We're going to continue to monitor for a newer high, possibly up near the 33,000 area. And for the downside, we'll be watching the potential support near the 31,500 near the this particular trend line here. So is the game over, you might ask? From all the internal and the price action we have looked at, the answer is a no. The Russell 2000 is approaching its all-time high. The S&P 500 is less than 1% from its all-time high. The Dow Jones Industrial and the Dow Jones Transportation have just made a new closing high. The only weakness is the Nasdaq. Even with that, the Nasdaq internal are not showing sign of weakness. The weakness of the index is mainly from those large cap tech stocks and those overpriced, overvalued stay-at-home, work-at-home stocks. If you have rotated away from these tech stocks, as I have mentioned a few weeks ago, then your portfolio probably did not incur much, if any, drawdown. But if you stuck with these tech stocks, then your portfolio probably incurring a drawdown in the range of 30 to 50%. So yes, the game is over for now for the tech stock and those stay-at-home, work-at-home stock, and some of those overpriced EV stock along with the semiconductor stock. But no, the game is not over for the reopening, the financial, the energy, and the industrial stocks. And yes, the market top is yet to come. The top is not in yet. Those that thought the high from the S&P 500 on February 16 is the market top has been proven wrong since February the 24th, when the New York Stock Exchange Composite Index, the Dow Jones Industrial, and the Dow Jones Transportation made new closing high. The S&P 500 high on February the 16th could be the top for the S&P 500, but not the top for the market. But I already gave you some stat that there is a high probability the S&P 500 will make another new all-time closing high. Could we see a minor pullback in the coming days? Absolutely, especially after some of the indexes make new high. but do not mistakenly interpret the pullback as a result of a market top. I hope you find this video useful and informative, and be sure to subscribe if you are new to this channel. And if you have not subscribed to this channel yet, click the subscribe button. Smash that thumbs up to help me promote and share this video. Thank you for watching and stay safe.